Today, after the FOMC meeting, the alarm bell started sounding. The Fed kicked off an aggressive start to its first easing campaign in 4 years, caught everybody by surprise. Even the PhD economists, where it says 105 out of 114 economists were wrong about the size of this cut. So clearly, something's brewing behind the scenes. It's going to be disastrous for the global economy. We went from a soft landing by Janet Yellen to a hard landing coming in early 2025. And in my opinion, as I've said before, that's still not bad enough. I'm thinking something like a crash and burn scenario. Let's talk about it. So here we are. The Federal Reserve just confirmed we're officially in a recession, and their latest move, let's just say, is not doing your wallet any favors. So today, they dropped interest rates for the first time in 4 years, not by just a little, but by a huge 50 basis points. So think of it this way. If you expected a drizzle and suddenly got a sudden downpour, that's the kind of shock we're talking about here. Why everyone appears to be rattled by this. Because when the Fed makes a cut like this is huge. It's pulling the fire alarm. It means that there's trouble, and not the kind of trouble that they can quietly fix behind the scenes. So the last time they made such a drastic cut was due to the health situation in 2020, and then also in 2008 with the financial crash, and then a dot-com bubble as well. So in other words, when the Fed pulls out the big scissors, it usually means a storm is coming. So what does this all mean for you in your everyday life? Well, the Fed has two big responsibilities: keeping people employed and keeping prices stable. But when they slash rates like this, they basically said we're more worried about jobs than inflation right now. And that's a red flag. It means the job market could be in way worse shape than they're letting us know. Will they hit us with a big cut like this, that things were okay? Definitely not. And here's the kicker. This move isn't going to make inflation magically disappear either. Quite the opposite. Think of inflation like a leaky faucet. It's been dripping for a while now. And lowering rates is like turning on the water even more. It's going to flow faster. So we get inflation when the government spends more currency than it has. And our government is on a spending spree right now. 35, almost 36 trillion in debt and counting. So when they spend like that, the value of the dollar goes down and the price of everything else goes up. And that's basic math. So sure, some people are saying this move could help the job market, especially with the holidays around the corner and all those temporary jobs popping up. But don't be fooled. Those part-time gigs won't fix this issue. What's really happening is prices will keep rising and your paycheck won't stretch as far. So it's like trying to fill a bucket with a hole in it. No matter how fast you pour into it, the water just keeps leaking out. And then there's also this idea floating around that maybe, just maybe, inflation is part of the big plan. Some folks believe it's like a sneaky tax, slowly shrinking the value of your currency to help chip away at the national debt. So clearly, I believe that's a part of the case as well. But no matter what, inflation isn't going anywhere. And if you got your money tied up in cash or dollar-based assets, you're basically watching it lose value day by day. This is why it's more than important to think outside the box. The system is not designed to make sure that you win in the end. And so you have to do all the work you can to make sure that you protect and preserve for yourself, because you can't ensure your retirement portfolio with government bonds and stocks inside of it. It's subject to the ebbs and flows of the market. So when it goes up, you feel wealthier. When it goes down, you're broke. So as always, the goal is to make sure you have something tangible and real in your possession that you own outright and not leaving it up to chance. It's up to you to do what you have to do to protect your wealth before inflation gets worse, because trust me, it will. It's not going to be overnight, but it's going to continue to be gradual until it's all of a sudden. But the signs are all there, and the value of your currency is already starting to slip away. So as I always say, continue to get your weight up and stay on top of these subjects by educating yourself so you always be one step ahead. And if you're of the entrepreneurial mindset, then a great opportunity will be for you to get involved with metals directly. And so that's why I have the silver team, where I actually help people get physical silver automated monthly so they can save according to what they can spend, educate other people, and be rewarded for their effort to turn back into silver. So if you're interested in finding out more about that, go to mysilverteam.com or the links in the description. And that's a good way to find out more information about the network. But other than that, just want to take a minute, share my thoughts, and let you know that it's quite obvious now that something is not right, or they wouldn't have made this type of cut. So we will see more volatility in the markets as we get close to the elections, and therefore there'll be more jitters in the stock market and everything else. But at the end of the day, the backbone of the monetary system is precious metals. So keep an eye out for them, because when the price dips, that's when you want to buy, because the manipulation can only go so far. But as I always say, manipulation can be your friend because it allows you to get in at a cheaper rate before it takes off. But anyway, just sharing my thoughts. Curious to hear what you think. If you found this valuable, hit that thumbs up button, subscribe and share so more people can find out what's going on. And then also all the resources that you need is in the description. I'll catch you later.